What's going on, everyone? Welcome to the Rise Real Estate Investing Podcast with your host, Mayu Tava and Austin Ye. Sorry, guys, for skipping a week. Let's acknowledge that.
Did we really? Shit, I didn't know
that. No. So we had the CEO of Open Room in our previous episode, but prior to that, I think we ended up skipping a week.
Yeah.
That's okay.
It's okay.
How's it going, man? What have you been up to? What have I been up to? That's man, it always stumps me whenever you ask me that. I mean, so one of the things I've been up to is that we actually let go of one of our property managers for property down around the London area. And the reason being is because cash flow, this is with a joint venture partner, right? Cash flow was very tight. We've unfortunately over the past 2 years had to endure one non-payment of rent. Unfortunately, we're able to get them out within a month and a half. I spoke to the tenant and they ended up moving out, but we didn't collect that month and a half rent. And then there's also the vacancy cost. And then there's also some smaller repairs whenever a tenant leaves, especially a non-paying one. So that ended up being like $7,000 or $8,000. And then there was a leak. You know how it goes. Sometimes with these properties, some small issues that accumulated. So what I decided to do is, we're doing a couple things. First and foremost, it's on variable and it's a static variable. So we're not paying down any sort of, it's the worst kind. We're not paying down anything.
Debatable. You're being saved on like the cash drain on the other side.
Yeah. But I mean, the rate's pretty substantial. And so if we switched it over to fixed, so right now there's 3 years outstanding left more on the variable. So if we switch it over to fixed, we can get close to 5% with the bank that we're with. Right. So we're like, okay, we can fix it to fixed. We can switch it to fixed. Bring it back to 30-year AM, and all of a sudden now our payment goes down $200. And on top of payment going down $200, you're getting
down. Yeah. No, that makes a lot of sense. And then now you're self-managing it. So now we're looking at Yay management services.
Basically, yeah. I don't like to self-manage, but obviously I'll step in when there's a little bit of a cash bleed, and that will bring things to a neutral position, actually. It'll bring it to, including we build in maintenance fees just in case things happen. So including building in all of those additional costs, it will be right at neutral. So I'm doing whatever I can. I mean, it's not fantastic. It's not bad. It's obviously a higher rate environment now, but obviously doing whatever I can to sort of make the numbers work. So yeah, that was actually quite time consuming. It was speaking with tenants, handymen, getting the team on board. So that if something happens, I know who to call right away to get the job done.
Are you getting a VA to middleman this, or are you going straight your direct point of contact?
I'm doing it because, so I spoke with the tenants to get recommendations on handymans, to get recommendation on other tenants, to get to have them facilitate showings. Because I told them at the end of the day, it's a multi-unit. You want to make sure that you get along well with the other tenants in the building. So obviously the VA can't have those conversations. Maybe in the future, once the tenant's in there and things are sort of cruising, I can get them involved. But for now, I'm running the show.
Yeah. That's actually not a bad approach, man. You sold them on why they should do the showings for you.
Yeah, I'll give them a little bit of money. Honestly, I'll give them like $100 or something. But I told them because they dealt with
generous,
that non-payment of tenant, that non-payment of rent.
Yeah.
They had an issue with that tenant as well. So I was like, dude, you don't want that to happen again. So why don't you vet them out for me just to make sure that you guys get along?
Not bad until they bring you like a failure fan and then they're never leaving and all that kind of shit. The risk, but we'll see. Yeah. What's been going on since you didn't even fucking ask me? I'll just
really don't care.
Anyways, but had a conversation with one of my partners on a property that we own together. He's getting married, need some funds. We're putting that up on the market. It's going to be the cottage. But I told him, man, cottage country is not moving. But we're okay to kind of walk out of this with like a break even. So I said, we'll just throw him back up. And I also told him, like, ultimately, if this thing was churning like a couple thousand a month in profit, we'd be more than happy to keep it. But it's basically operating at a break even or a slight loss, maybe even. We'll see how it does after the summer. But as a result, like, really doesn't make sense for the additional time and effort. Right. Other than that, we still have the commercial property. Oh, wow. I guess it has been a while. Maybe I didn't join the preamble last time. I think that's what happened.
No. Yeah.
We still have the commercial property under contract. It got extended now. It's a 70-day condition. It went from 15 to 28 to 42 to 70.
Holy crap.
Phase 1 environmental came back with contamination. We weren't too surprised, but it's more related to, it's not the issue that we thought. It's related to an oil tank that was underground that had a contamination. So now the seller is paying for the phase 2. And then we've already expressed that the seller is going to have to be the one that pays for remediation, which he's okay with as long as it's not crazy ridiculous like number, right? So we'll wait and see about that one. What else has been going on?
Yeah, so I was going to ask, I mean, a big part of that, so we're talking about the BTB terms, you got a pretty good BTB term, but big part of that is...
We can't publicly talk about the BTB.
That's fine. There's a BTB involved, right? But that being said, they wanted to sell it before, obviously, the date. Well, I don't remember the exact date, but the capital
They didn't even care. They didn't even care about this capital gains. Either the seller doesn't know or the realtor is blocking it. I don't understand, because let's just say I gave a very aggressive offer. I don't know how to describe this, but I gave an offer that would close before the June 25th deadline or whatever. Our initial offer was supposed to close May 30th. And then obviously with the extension and stuff like that, I kept getting pushed out. But in this final push out, I offered 2 closes with the contamination there and not knowing how much contamination is. With the agreement that seller would pay for the remediation after close, but to reduce my risk, there was kind of a restructuring of VTB terms and stuff like that, just in case the seller doesn't pay for the remediation, right?
Right.
And part of that, and what would have made it really attractive for them, is we would close June 15th to 20th, right? But they turned that down. I was like, all right. It was a really aggressive offer. It would have been crazy if you took it, but now I think we're pushed out to end of July or something like that.
Okay.
So I don't know. Okay. I don't know if realtors are blocking it. I don't know if he just doesn't care. I don't know what it is.
Very interesting. Very interesting.
I see some wholesale deals coming out from you guys.
I wouldn't say it's a lot more wholesale deals. Our lead pipeline is getting a little bit slower right now. So we're at, I don't want to say the end, but in terms of the future outlook, not as much in the lead pipeline as we had prior, right? We have a couple of things we're working on to send out in the next couple of weeks. But yeah, just trying to keep that pipeline going. But I can see that it's slowly sort of drying up. And I can also sort of notice, I mean, the market is better than it was before, but I also notice like things are sort of slowing down a little bit more than they were near the beginning of the year too, right? So, and I think that mirrors what realtors are seeing on the MLS as well.
Yeah, it's what you and I were talking about as well, right? Like I can see live like traction on the mortgages as well. Volume is decent, like I'm not complaining, but it's not by any means like craziness. Like we have rapid spurts and just like crazy, like busy, like everyone's like hitting you up and buying something, and then you go through like these random like spurts of like, yo, what's happening? Is anybody even transacting in real estate, right? Wow. So I'd say we're somewhere between closer to the latter there, but yeah, enough said. I know this week we do not have a guest. We have one of your previous live shows, Austin.
Yeah, I guess you can call it a guest, but it's not, of course, it wasn't a live recording between you and I. It was a live stream that we have, the Ask Me Anything on the Rise Facebook group. If you guys are not tuned in on the Rise Facebook group, make sure to definitely follow us on there as well. There's tons of great content. But we had Sam Castillo join us on our live stream with an Ask Me Anything on insurance. So if you guys heard our podcast recently, we had Sam on before, but this time we dive even more in depth on different sort of aspects of insurance, from commercial to residential, multifamily. And we also took some guest and audience questions as well. If you guys don't know who Sam is, make sure to check out our previous episode where we get behind on his background story and how we got involved in real estate investing. But without further ado, we're going to jump right on in. Again, all about insurance. If you guys enjoy this podcast, share with a friend, leave us a 5-star rating, and let's hop right on in. Thank you guys so much for joining us today. This is our monthly live Ask Me Anything. For those who are unfamiliar what this is all about, I bring on an expert guest where we dive down into a specific niche topic. In this month's live Q&A, we're going to be talking with Sam Castillo all about insurance. He's a multifamily investor, a good friend of mine, and an insurance expert. So if you have any questions around infinite banking, around residential investing insurance, around commercial investing insurance, then he's your go-to guy. Sam, thank you so much for joining today.
Thanks, Austin. Excited to be here.
Awesome. So without further ado, why don't we just kick it off with some basic questions? And in general, very basic question. What is an insurance agent and why should we bother using one? Because I remember with my first investment property, I think I was just trying to quote things out myself. I didn't understand what an insurance agent's role was. So why don't you give some people some insight into that?
Yeah, absolutely. So, well, thanks for having me on anyways, Austin. And I'm really excited to bring you guys some value with insurance and the importance of having the right insurance and all the things to look out for. So I'm looking forward to answering all your questions. And so pretty much, So I'm Sam Castillo, and I'm an insurance agent. So pretty much what an agent is, there's two terms. There's usually, you talk about agents and you hear about brokers, and what's the difference, right? So an agent is exclusive to one company. So I'm exclusive to one company. I work for one company, and I offer insurance policies through one company. Now, a broker will have a multitude of options. That's pretty much the biggest difference when you're looking at, insurance agent, insurance broker. And there's pros and cons to both. And I'm looking forward to getting into that a little bit as well.
Yeah, why don't we go over some of the highlights, the pros of using an insurance agent? What's some pros of using one, and why do you think people should use one instead of going and sort of quoting things out themselves?
Yeah, I mean, a lot of the times when you use an agent, they will know that one company very, very well. So they'll know the ins and outs of the policies and the coverages and how they can accommodate a client. So there's definitely a lot more time to be able to focus on one company. Of course, sometimes we're kind of, we focus on certain types of businesses. So we'll be very, very good at one thing. And sometimes we might not offer certain services for certain clients. We're a little bit more restricted, but also, for me, I like to focus on not so many different types of, let's say, commercial policies, or, I could focus on one type of client as opposed to being a broker. It's like it can be a little bit confusing and hard to get to know your products a little bit more, I think, because there's so many different options.
Right. Awesome. So we have a question down here, a very general question, but what is property insurance? Maybe from the perspective of a home buyer and from a real estate investor.
Yeah, so property insurance, we call it fire insurance in the industry. So pretty much anything that can be lit on fire. Property insurance can go from an insurance on a building to insurance on contents. So pretty much property insurance, again, building all the way to contents and stock in a building.
Perfect. And sort of diving deeper into that, in insurance, there's like obviously the sort of technical terminologies not everyone's familiar with. Common ones are premium, deductibles, and coverages. Would you be able to touch on what each one is on a high level for those who might not understand?
Yeah, so premiums is pretty much what you're paying annually or semi-annually for your insurance. So your premiums are definitely something that you want to keep an eye on, especially if you're an investor. Your net income is extremely important when it comes to refinancing. So keeping an eye on your premiums, if you see any significant jumps from year to year, it's definitely important to make sure you're keeping tabs on your premiums, just to make sure that, when it comes to refinancing and keeping your tight net operating income, that you're keeping an eye on that annual premium. So we, as insurers, we send out your renewal minimum a month out prior to your renewal. So you have some time to kind of review, make any changes, and also gives you some time to shop around. So 1 month prior to your renewal, you should be taking a peek and making sure that you don't get any sticker surprises when that renewal comes up. So that's for the premiums. Now for deductibles. So deductibles, pretty much how I describe it to clients is, if a claim were to happen, it's the first amount. So say if your deductible is $1,000, you pay the first $1,000 as your deductible, and we pay the rest. So sometimes your deductible on different types of coverages may vary as well. So you might have, $1,000 on building, and then you might have $2,500 on the content. So you want to make sure that you're kind of keeping a tab on that as well, because you might have different deductibles on different coverages as well. So making sure that, if your deductible is manageable too, you don't want to have a deductible that's too high just to keep your premiums lower, because, if a loss does happen, you do have to pay that portion out of pocket, right? So again, you pay your deductible first, and then the insurance company pays the rest. or the difference.
Gotcha. And what are coverages? And is there any example of popular coverages that real estate investors should consider? Or I wouldn't say popular coverages, but coverages investors should consider.
Yeah. So there's so many types of different coverages out there. But when I'm thinking about like a rental property, I'm thinking about rental income, right? So one of our biggest pieces of our businesses is, especially when you own a building, is your income, your rent, right? So that's a huge part of your policy that you should be looking into, just making sure that you have sufficient coverage and you understand how it works. If a fire were to happen and you have to rebuild, what kind of coverage do I have for that rent that I'm missing out on, right? And how long does that coverage last? So there's sometimes no coverage on policies I've seen. I've seen coverages that cover you for 12 months, 18 months, 24 months. So there's different types of levels of coverage as well. So you want to make sure that you have income replacement or rental value coverage in case a fire happens and you're not getting any rent. So you want to make sure that you have insurance for that and for that renter coverage if something were to happen. So each policy is going to be different. When I look at that, I always try to give them the best and longest amount of coverage. Because right now, especially coming out of the pandemic, right, it took so much longer to build things. If you only have 12 months, the likelihood of rebuilding an apartment building in 12 months, I mean, good luck with that, right? So definitely review your coverage to make sure you have rental coverage. And because you'll be surprised of how many people don't have that.
Right. Awesome. We're going to dive into this a bit more, but we did get a question and I want to make sure that we answer it just in case, as this person is still probably on. What type of insurance is best for covering both rental properties and a primary residence? And how do I navigate insurance when adding a property to my portfolio?
So I would say you want to make sure your liability coverage is sufficient. So typically you see $2 million liability. As you start to gather and grow your portfolio, I would say you want to have either an umbrella policy that covers you for liability up to $5 million. So you want to make sure your liability coverage is sufficient, especially as you have more units, more chances for slip and falls. You're more open to liability as you grow your portfolio. So making sure you have sufficient liability coverage when you have rentals. And again, that rental coverage to make sure that, if something happens, a fire, a storm, and you're not getting rental income, that you have insurance coverage for that. So those are two things that I'd 100% make sure that you have on your policies. And as you grow your portfolio with liability, let me see what else he has in here. And also, how do I navigate insurance when adding a property to my portfolio? So for sure, when you're adding properties to your portfolio, and this is so important, do not use their insurance premiums when you're doing your financing. One of the biggest pitfalls when it comes to insurance when you're buying a property is like you're buying an apartment building, let's say, and you're using his or her old policy premiums. They've had their policy in effect for 15, 20 years, and it hasn't been reviewed in that long. And then you're using that for your numbers when you're starting to see if it's worth putting an offer in. Make sure that you have a conversation with your insurance professional to say, hey, what's an actual accurate amount for me to get insurance on this building? Use their insurance premium. It may throw you offside on your financing. And who knows, you might run into issues about even insuring the property. Maybe they have galvanized steel. Maybe they have water issues in that area. Make sure that you're just reaching out and getting kind of a lowdown on, what things to look out for from your insurance professional for sure. But again, don't use their insurance premium that they have already. Call your insurance professional that you trust and see if they can give you some advice on that particular property.
Awesome. And also, I guess, primary residence. So he pointed that out as well. Does that really change between the policies, coverages, deductibles of going primary versus a rental property? What are considerations that you would think through for a primary?
Well, I mean, like your primary residence, I think you always have to look at things in a business perspective, right? When you're trying to lower your costs for insurance, playing with deductibles is really important, but making sure you have an emergency fund for each property, your personal property, and you have an emergency fund for your investment properties to make sure you can cover things like your deductible, right? So the difference is, personally, you just have to make sure, like typically the cost for your principal residence, the insurance cost is lower because you live there, and your care for your personal property is usually higher than, someone that's renting off you, right? There's more risk when someone's renting off you. You've seen and heard a lot of nightmares with tenants. So the insurance cost is higher. So you might want to have a higher deductible when it comes to a rental property, mostly because the cost is higher when it comes to that. With your principal residence, you're probably comfortable with $1,000 deductible, let's say, as opposed to a $5,000 or $10,000 deductible if it's an investment property. So you definitely, play with the premiums a little bit with the deductible. As long as you have an emergency fund and you're ready to, take on that deductible if something were to happen, and understand, okay, if a flood happens, my deductible is $5,000. That means that you're paying the first $5,000 and the rest is hopefully getting covered under the insurance. So, yeah.
Awesome. Moving on to the next one here. How does an insurance company determine the cost of a policy? And should I go with the cheapest insurance? Why or why not?
Oh my goodness. Just take the cheapest policy. It's like, it's definitely hard lessons that a lot of people and investors have learned. It's so important to understand your coverage. And for me, it's definitely important for me to explain to my clients, like, what kind of coverages do you have, right? Like, understanding that not all insurance policies are built the same. There's different levels of coverage in each policy. Some companies don't offer certain coverages in certain areas. I would take like flooding, for example. Some areas, some companies will limit the amount of coverage you can get. So you might have a quote that has water coverage on it, but it's a $10,000 limit. And they limited you because you're in a floodplain, or you're in an area where you might be more higher chance of a flood or a sewer backup happening, right? So not all companies and policies are the same. So making sure that you're understanding your levels of coverage and what deductibles and all that. So don't always go with the cheapest policy. You might be sorry for that, but 100% ask the questions, right? And any insurance professional should go over those coverages and make sure that the client understands them. And definitely don't go. Usually they're cheapest for a reason. And you want to make sure that you're, if you have an asset. And for me, I like to be around clients that value their properties. And usually, they want to, ask those questions, right? Like, do I have proper water coverage? Do I have rental coverage? All these different things. So if a client is going, I just want the cheapest, that's definitely for me as an insurer, like as a insurance professional myself, that's usually a red flag, right? Like I don't usually like to approach it that way. And most people that I deal with are just like, okay, well, let me understand it. And then they make the decision on their own, right? They can go, okay, I understand that risk. Let's go with that. But if they want to do that, that's totally fine. As long as I've kind of shown them the options and explained to them what the policy entails.
Where's that fine balance between like overdoing it with every single coverage, like minimum deductible, et cetera, versus, and that the policy is going to be insanely expensive if you just go all out and try to reduce every aspect of risk, versus just completely underdoing it? Like, how do you balance the two?
Yeah, I mean, that's a really, really good question. And I think in regards to property insurance, it's very hard to over-insure something. Like, I think sometimes the water coverage can be, in some areas, pretty pricey sometimes, but that means there's a higher likelihood of a water issue happening, right? So that's a great question. Like, how do we determine rates is super important to understand. And as companies get smarter with analytics and geography using underwater lakes, and they really get smart in how they rate insurance policies, you typically, when we look at a risk, we look at, is it close to water? Is it close to a sewer backup claim area? Is the likelihood of fire? Sometimes for our West Coast friends, there's fire areas where it's higher cost for insurance for fire. So how we kind of predict, and we use analytics and AI now these days, and that's kind of a hot topic in our industry, is, we kind of know where problematic areas are, right? So, how you balance it is, okay, well, maybe I can limit the amount of coverage I have on a certain property, and I can limit my chances of something happening because I put a sump pump there, or I have a backup sump pump, or I have a backup valve. I make sure my tenants are, speaking to me if there's any issues, right? So there's kind of definitely sometimes you have to make those decisions, right? Because the cost for the water coverage might be so high. So how do I mitigate that risk, right? So sometimes we run into those issues where we do have to self-insure sometimes. Some clients have to, and as long as they're making that decision, right? So, but sometimes you don't run into that issue, but usually it's how we run into those issues is where there's highly rated water areas, right? So, but the client can mitigate a little bit by putting sump pumps and that kind of thing.
Gotcha. Perfect. Okay, so is there any policy if the tenants trash the place? This is actually common during turnover, right? Let's say that tenant stops paying rent, and then you get the eviction notice, and they absolutely destroy your unit. Is there any sort of coverage that protects that, or not really?
Yeah, that's a tough one, especially when it comes to student rentals. So we want to make sure that your tenants are getting tenant insurance. Okay. So the reason why I want my clients that have investment properties to have tenant insurance is because if something happens, they burn the place down, you have someone to sue, right? So you want to make sure that your tenants that are moving in, they all have their own tenant insurance, because their liability is there, right? So you have a policy to kind of subrogate against. But for sure, I mean, that's definitely an issue, and I've seen some horrific examples of that. So it is hard, especially when it comes to student rentals, to get coverage to that through your policy. Usually it's something that is not available when it comes to student rentals. But if you have a general policy for like a family, something like that, there are some times where we can offer something for them.
Question here. Usually there's a form for insurance. It's covering your head. But it says there, usually there's a form for insurance. Sometimes you don't know the exact details, like when the electrical is replaced, plumbing, etc. How do you suggest handling that? What if the wiring is copper, but knob and tube is behind the wall? What happens if insurance, let's say there's a fire that's caused by the electrical, but obviously you couldn't see it? It's a loaded question.
No, you know what? It's very, very tough to get 100% details, right? And what we do is we try our best to, sometimes we'll do inspections on a property, but as long as the client's, acting in, there's something called utmost good faith in insurance, right? So as long as the client is being 100% truthful, the best they can, here in London, we have Century Homes, right? So sometimes in the background, there is some of that, right? So as long as the client is being as truthful as they possibly can, sometimes it's not going to be 100%. As long as the client's trying their best to be honest with us, we're not out here to get out of a possible claim. If the client's being truthful, usually the company is going to, an insurance company is going to come out and do the best they can to pay out a claim, right? So, as long as the client is being as honest as they possibly can, and those details are tough to get, right? But working with your realtor, working with the sellers as well, just to try to get as best as information as you possibly can. That's all we can ask, right? But I could definitely understand and empathize with that sometimes it is tough to get 100% accurate. As long as you're being honest and do your due diligence the best you can, that's all we can ask.
Usually most of that, to your point, most of that information should be on the MLS listing for the most part. So yeah, to your point, as long as you're trying your best, it seems like it should be okay. Can you get coverage on Airbnb and illegal self-contained units?
Yeah, so Airbnb has become a arbitrage that really has come to light in the last 3-4 years, right? Austin, before it was more like student rentals. It was was a go-to. And now, as technology gets amped up and we're using technology and websites to connect with each other and able to make some extra cash, I think that's a big point too, is that people are looking for other ways to make some extra money to get by too, right? So Airbnb has definitely been a business that has come up to light, and 100% we offer those services. You can add it as a rider on our policies up to 180 days. But if it's a full Airbnb, that it's rented out, we do it under a commercial policy. Yeah, so definitely for us, not an issue. For illegal self-contained units, that's a tough one, right? Because a lot of the units, I think, in most cities aren't 100%. We understand that. But I think our best approach is we do our best to insure things properly. So if it's 2 units, we try to insure as best we can with our clients to make sure that it's insured as 2 units. But when it comes to the legal, I don't anyways, get into the legal of it. I ask you, is it built as 2 units? Obviously, I wouldn't be looking to insure hoardings or a place where there's like 15 people living in a room, which is, for me here in London, I haven't run into that yet. But I know as the pressure of homes demand goes up, we understand that there's definitely this question that's going to continue to come up, right? So we leave that to the city as best we can. And, for me, I'm not a lawyer, I'm not a city employee, but I think, we do the best we can to say, how many units are there, how many kitchens, how many bathrooms, insured from a replacement standpoint. As far as legal stuff, we don't really get into that as much.
Gotcha. So obviously it's more prudent to stay on the legal side.
100%. Yeah.
Yeah. If you get to the illegal stuff, you are going to take a little bit of a gamble for sure.
You're taking a gamble in a lot of different aspects too, right? You want to make sure that for sure your tenants are safe, right? Like, I don't want to insure something or, deal with landlords that are not doing things the right way, right? Like 100%, if you're not doing things the right way, it's going to come up, it's going to bite you in the butt. Shortcuts don't make for a long career, right? So we want to make sure that we stay away from the legal stuff and for units and make sure that we're doing things the right way. And it's more for public safety, right?
Right. Yeah, totally. Question here. So you mentioned commercial insurance. What exactly is commercial insurance?
Yeah, so commercial insurance, well, I mean, it's so vague, right? Like, what is commercial insurance? So commercial insurance can really span from anything, for us, is 6+ units to your local convenience store, right? So commercial insurance for property, 6+ units. And if it's an Airbnb, bed and breakfast, that type of thing would be commercial. And it could span all the way to your convenience store, your contractor, that kind of thing. So we do all that type of insurance. I have amazing staff that specialize in commercial insurance. And we're really excited to kind of focus more on that side as opposed to, the home insurance, personal stuff. Commercial insurance is extremely exciting. There's so much, it's really broad, right? So
this might be a better question here. What are the types of businesses and properties that will typically require commercial insurance? So you mentioned Airbnb being one of them.
Yeah, so different types of property. So we'll answer that question first. So anything that is like room and board, like an Airbnb, over 180 days would go to commercial. Anything 6+ units. So 6+ units, commercial for us. That's the property insurance. So apartment buildings, it's commercial. For business, anything that you're dealing with the general public, you should probably have a business policy. So even if you're a cleaner, you're a contractor, you might think that, you're doing things on the weekend, but next thing you know, you're getting a lawsuit because you did something wrong. You want to make sure you have commercial insurance or business insurance.
And similar, like if you own, let's say, a multifamily property with mixed use and there's some commercial tenants, I assume the commercial tenants also have to get their own insurance on top of you insuring the building. Is that right?
Yeah, 100%. Like, if there's anybody in your building, either if it's a tenant that just lives there or it's a person that runs a business out of your property, please make sure they have tenant insurance. Like, it's just an extra layer of protection for you. aside from, having a corporation, have a conversation with the lawyer about having a corp and a hold corp, your tenants having insurance, it's another layer of protection for you. So,
Right.
I mean, it might be annoying. It might be one of those things that you don't want them to, it's part of being a business owner. And, believe it or not, if you're a property owner, you're in business. You have clients and your tenants are your clients. And you want to make sure that if they get sued, they have a policy and it's not going to you, right? So it's another layer of protection. And also, if anything happens, if there's a fire, their contents and their stuff is insured, right?
Right.
So, if there's a fire, you want to make sure that you got rent coming in through an insurance policy, but also if they have a fire, they have somewhere to go. And that policy, tenant policy, should have additional living expenses to cover, their stay at a hotel or, to cover their contents if something happens. So you're doing a kind of you're not doing a disservice, you're doing a service to your tenants or the business that's in your building to make sure that they're okay as well. Yeah.
Perfect. What factors influence the cost of commercial insurance premiums?
Yeah. So factors could include the occupancy. So it could be from anything from, if you have a commercial property, the occupancy, like what type of business it is in the building. If you have a commercial property and you have, I don't know, like a kid's play place, one of those places like Kellogg Lane or Flying Squirrel or something like that, there's a higher risk of liability, right? And in business and in lawsuits, when there's a lawsuit, they want to sue everybody, right? So they want to sue the property owner, they want to sue the business owner, they want to sue everybody, right? So you definitely want to make sure so that's something that could affect the insurance is the occupancy, what type of occupancy it is. And other things is kind of for commercial properties is what type of build is it? Is it masonry, non-combustible? Is it frame? Frame being the most expensive, and masonry non-combustible is usually the best price. So the type of build of the building as well is going to affect the premium.
Gotcha. Perfect. Awesome. And is there any reason, this is just, we didn't get a question on this, but I'm just thinking about like back a while ago, I had insurance on a property and sometimes the company would ask me to take photos of the front and the back of the property. What's the reason behind that?
That's really like an underwriting obligation, right? So, what type of shape is the building in? Is it in an area where it's next to a boarded up house where there could be some concerns for arson there? Or, so those pictures are so valuable to us for underwriting to make sure that we're, because sometimes we're not inspecting it right away, right? So it's giving us a snapshot of the area. What type of shape is this building in? Is this something that I want to put my name on and have insurance on, right? Like those are for sure. For me, I want to make sure that I'm insuring properties that aren't slums, right? I want to make sure that they're properties that are well taken care of, that aren't in risky areas next to, boarded up house, let's say. Those pictures, for one, make me feel more comfortable, and they make the underwriters, it's part of an obligation of underwriting a policy, right? Just to make sure that we're insuring the right stuff.
Mm-hmm. Yeah, no, that totally makes sense. Nobody wants to insure. I'm trying to remember. No, this was mortgage fraud. I remember in the U.S. or something for appraisals, they asked for photos, and I think a client took photos of like different properties and then sent it over, and then the properties were all in shit condition, but they were showing nicer photos. Has that been an issue ever? And then, like, obviously, you're shooting yourself in the foot by doing. I guess, yeah. Why would you want to do that? Because you shoot yourself in the foot. If anything happens, then you're not going to get insured anymore. So
there's always going to be bad apples, Austin. And I think, for me, like I want to do business with people that are, for one, I can educate and I can kind of guide them through it. Like for me, I'm like your guide through this insurance world, right? So for me, if I can give you education of, listen, there's different types of approaches of how to insure this thing. Maybe I can give you some pointers of how to get it to a point where you can get it insured. I'm here to guide you, right? Because exactly, you might be shooting yourself in the foot, like sending pictures of a different building. Well, like it's just, for me, that's just so,
That's straight up wrong.
It's just, it makes me sad for that person, right? Because if they're going to do things like that, who knows what else they've done in their lives. So for sure, I mean, that's what we call a moral risk. I think that's telling of that person, right? Because for me, I mean, you're only affecting yourself, because if something happens and you've done that, it's just not going to pay out, right? Like, as simple as that. If there's fraud, right? So for me, it's to be a guide for you, to give you good advice, to make sure we're doing things the right way, not trying to do things on the fly, right? Do things the right way. And that's just the way I live my life anyways. And I want to have clients that live their lives the same way and grow a portfolio that's something that you can be proud of, right? Like, you don't have to worry about it. It's just way better.
Yeah, you don't want to sleep with, one eye open, especially if shit hits the fan.
Absolutely. Good way to put it, Austin.
So you do much more than property insurance. I feel like infinite banking is a concept that's come up a lot more in the investor community. Would you be able to explain what the concept behind infinite banking is, and how does it relate to whole life insurance policy? And also, what is whole life insurance policy? To really just break it down as if this is the first time someone's hearing it.
Yeah, absolutely. So thanks for asking that question. And I think as we come into a lot of higher taxation era here in Canada, I think a lot of the conversations are definitely starting to pop up about, how can I invest, and how can I, tax efficiently grow my portfolio. And I think whole life insurance and infinite banking, I guess people have been using that term a lot, is infinite banking is just pretty much a whole life policy. So there's two different types of insurance policies out there. So one of them is called term insurance, and the other is called permanent insurance. So term insurance is insurance for a set amount of time. So let's say a 10-year term, 15-year term. So it lasts until that time comes up, 10 years or 15, all the way to 30 years. Some people have it to age 35, and then it renews or it just runs out. So the other type is called permanent whole life insurance. So when you hear infinite banking, it's whole life insurance. So there's two portions of it. So there's insurance that goes up over time, and there's cash values that the insurance company pays out dividend. So it's a participating policy. So as the dividends get paid out, the client has access to that cash. So they can access that cash through a loan, a policy loan, and they can use that money to invest in properties. They can use that money to invest in the business. So that policy is definitely an amazing way to grow your cash values tax-free, because it's within the whole life insurance policy. So that the growth on it is not taxed on the way up, and you can leverage it and access that cash through a policy loan, typically up to 90%, about 90% of whatever that cash value is. So if you are a corporate owner and you have some retained earnings, definitely it's something to consider. And being tax efficient is definitely important. Austin, as you know, it's definitely become a topic of conversation, especially lately, because of, the cost of living, and, paying yourself is expensive. So being able to use a vehicle that grows tax efficient is tax efficient when you pass away, because life insurance, again, in Canada, for most cases, it's not taxed, right? So definitely having a conversation. I'm open to have a conversation with anybody if you'd like to discuss that. Definitely something, if you have a corporation that has retained earnings, having a corporate-owned whole life policy is extremely important. I can't undernote that. Extremely important. It's something that if you do have retained earnings and you have a corporation, reach out, have a conversation. It might be something for you, might not be something for you. There's pros and cons to everything, but definitely there's some people that should be having that conversation.
Gotcha. So just to understand better, when you purchase a whole life insurance, does that money, so you get paid dividends, that money is being invested by the insurance company, or where's the dividends coming from?
So it's based on the insurance companies, like how they have done and how so pretty much every year, the board of directors will have a meeting, and then they'll kind of come up with a dividend for that year, right?
Okay.
So, it could be 6.5%, could be 7%, 6%. It varies from year to year. But typically when they pay out a dividend, your cash values will grow over time and you'll have access to that cash value, and that growth within the policy, for the most part, it's tax efficient, tax free.
Gotcha. Awesome.
Yeah.
So you can leverage that again to reinvest into other assets.
Yeah. For real estate, for my real estate investors out there, definitely let's have a conversation if it's something that might fit you. There's a couple of things that you do have to look out for. Like, a part of your premiums are going towards life insurance, and you have to be insurable too, right? So there's different things that you got to look out for. It's not for everybody, but I think as we go into, like we talk about tax efficiency, I don't think there's anything like it. So I love having that conversation.
Awesome. Question here, just to sort of continue off of the whole life insurance policy. What are the advantages and disadvantages of it? What are things that people should consider? Because as you mentioned, it's a great solution for a lot of people, but it might not be the right solution for others. So what are some considerations?
Yeah, I mean, considerations is that you're paying premiums, right? So your cash flow in your business might dry up, right?
Yeah.
So if your cash values haven't had the chance to grow sufficiently, then you may have to reduce your policy. You may have to, let it go at a certain point, depending on how much cash values there are. Sometimes there are downsides for cash flow, right? So it's not for every person, but the drawbacks are that, it is an investment and as well, just restraints, right? So sometimes it might not be until the second or the fifth year, depending on how the policy is set up, the cash values might not have a chance to grow. So you might not have access to that money for, 3 to 5 years, depending on the setup, right? So typically when you're looking at an infinite, that strategy anyways, you're looking at hopefully heavily loaded on the cash value side. And that's typically, it's usually you have to have some accessible cash to be able to do certain approaches to it.
Awesome. So definitely we're going to move on from the infinite banking and the whole life policy chat. It's not like a straightforward conversation. It's not something that we'll probably have an entire session on that alone. So if there's any other questions or follow-ups, you can just hit Sammy directly, and his email, Instagram is down below there.
Yeah. It deserves a conversation. And sometimes, we end up seeing, this is something that's definitely something that you should consider. And sometimes we say, okay, listen, you're not there yet. Get a term insurance policy to cover your liabilities as you're growing your assets. You have a young family, you have $1 million, $2 million in mortgages out there. You want to make sure that your family's okay if something happens to you, right? So the conversation might go, okay, I'm not ready for that conversation just yet. Let's get some term insurance just to cover my liabilities while I'm growing my assets, growing my portfolio, and maybe having that discussion at a later point. Sometimes it's not now, maybe later, maybe it's not ever. Every client's going to be different, but we sit down with our clients just to make sure and do a needs analysis, and we always do the right thing. That's my biggest approach to life is I always try to do the right thing and get the best advice, and I think that's how I sleep at night, right? So that's for me has always been the right approach.
Yeah, and of course it's never too late to have that combo. It's obviously better to have it while you're younger versus older. The younger you are, the more beneficial it'll be much cheaper.
Yeah, and then you can heavily put more towards the cash values, which will grow that asset that you can leverage, right? And again, like those whole life policies, the cash value on those can be used as an asset on loans too. So if you're applying for a loan, they'll ask you, do you have any cash value in your whole life policies, right? So for me, it's something that, again, not for everybody, but it deserves a conversation.
Yeah, absolutely. Awesome. So question over here, this is back on the property side of things. We're going to shift towards claims a little bit. No one likes to talk about claims, but the reality is that it could be something that you're going to find yourself in as a real estate investor. I know I have twice, not great, but it happens. So when you choose between, how do you choose when to report something versus when to just bite the bullet and do the work yourself? Sometimes like there's a little bit of a sump pump backup, and let's say it's going to cost you $2,000 to clean up versus getting insurance involved. And then maybe insurance is like, okay, this is a problem property, so next year the policy, we're gonna tag on some premiums there, right? Like how do you determine, is like, oh, I'm gonna go through insurance versus I'm just gonna pay out of pocket? How do you
100%? And that's a pretty good question, because you went through that, and I'm sorry you went through those claims, Austin. I think it's really dependent on the situation. Cooperators, like certain companies have guarantees where you can call them, get some advice on a claim if it's worth it, without having to be actually reported as a claim on your file. I can see, resistance of, wanting to call your insurance company, but I think sometimes you got to say, okay, what's my deductible for one, right? So when you look at a claim, what's my deductible? Is it worth me putting in a claim, or can I get this mitigated myself? But usually, more than often than not, it's important to, for one, if it's something that happened, it's good to call your insurance company, because if something actually comes to fruition that it comes to become a bigger problem and you haven't notified, you're calling them like 6 months later, they're probably not going to pay the claim. It's happened over a period of time, right? So for sure, if there's something, just make sure either you take care of it, you make that decision, you take care of it, or you call the insurance company, right? So the problem doesn't continue and get worse, right? So, when you're making that decision to go, okay, how I would analyze that situation, I would say, one, what's my deductible? What is my cost to fix this? And then you can kind of make that decision based on those two things.
Gotcha. So, I mean, let's use an example here. If your deductible is $1,000 and the cost to fix is like $1,500, would you even go to insurance, or would you just suggest paying out of pocket? Or is it actually like a misconception? If you go through insurance, because like vehicle insurance, you know what I mean? If you get into an accident, then your premium is going to go up. Even if it's something small and you report it, likely your premium is going to go up. Is it the same thing on the property side of things?
Yeah, I mean, it's definitely, like, again, every insurance company is going to be different how they look at rates. Sometimes it might be 5% increase. Sometimes it depends on what happened too. Like, is it a water issue that's continuing to happen? Like, sometimes an insurance company might go, listen, Austin, I love you, bro, but this is the third time you're making a water claim. We're probably going to, either take that coverage away, or, the insurance company is going to play it by ear. I think you got to make that decision based on your deductible. That's the way I look at it, right? If it's if it's $500, I don't know. I'm probably leaning towards, personally, I'm probably leaning towards not putting in a claim and just making sure that I take care of that issue. But just don't let it continue, right? Take care of it, like mitigate it, take care of it so it doesn't happen again. Because if you let it go, then there could be lots of issues with, if there's mold or whatever, right? Just make sure you take care of it either way.
Even if you're aware of it and you don't take care of it, like, you have the responsibility to insurance to obviously ensure these problems are taken care of. Like, for example, if there's a structural issue in your house and you just let it be for a year and your house collapses, I doubt insurance is going to cover it. Like, you should have taken the measures.
Exactly. Just make sure you take care of the problem. 100%.
Awesome. So we have two more questions here. Can you explain the process of filing a claim and what clients can expect during that process?
Yeah, absolutely. So when you file a claim, usually people have an agent or a broker. Give them a call. They usually will send you to a claims department. So each insurance company should have a claims department, and you can start to kind of give your details. For one, I would say if it's like a water claim or a fire claim, take as many pictures as you can. If you haven't already, take an inventory of your contents in your house. Maybe get a video, go throughout your house. We have an inventory list as well. If you're insured with me, I could send it to you. It's just a list of contents. You can write down the values and jot down some information there. But taking a quick video throughout your house to make sure that, if fire happens, likelihood of you remembering stuff, it's pretty hard, right? So if you had a video, send it to yourself, take an inventory list, send it to yourself, have it on a cloud somewhere. And so usually you call the claims department. They'll ask you what happened, and then they usually, we'll ask you to try to mitigate any further losses and send someone out to start taking care of the problem for you.
Gotcha. From what I've heard, I don't know if this is kosher to say. I don't know if you're able to answer this, but I'm going to say what's on my mind. I've heard an adjuster's role at times, if it's a big claim, is to try to minimize how much they pay out. Or not their role, but like it's almost like, I mean, there's not really any good way to say it, but yeah.
I hear you, man. I hear you. Honestly, like, to me, the way I look at it is we are here and we have a job and a duty to put the client back in the same position that they were, right? And unfortunately, I'm sure there's been times where, the rep comes from somewhere, right? And there's got to be a middle ground where, sometimes insurance companies get taken advantage of, and sometimes, it could go the other way possibly. But I think the reason I have a job is if something happens to my client, I want them to be in the same position.
Right.
Okay. So for me, I take it extremely personal to make sure that happens. Definitely doing, like I said, inventory, making sure that you have adequate coverage, that you're reviewing your policies to make sure you understand it, right? A lot of times that anger comes from, maybe not reviewing it, maybe not taking the time to maybe getting the cheapest policy possibly. And sometimes the advice hasn't come properly from the advisor as well. So it's got to be a team, right? We're both coming together to get the best policy in place that makes sense for you, and you both understand it. So I think a lot of that times where that misconception or that happens is because, for one, maybe we don't understand. For one, I think it takes two to make a policy. So it takes me giving you the advice, asking the right questions, and meeting in the middle, and making sure we do something that you understand and makes sense. But I think a lot of times that does happen where either it hasn't been explained properly or the policy wasn't set up properly at the beginning. So making sure that you're doing your reviews and just having conversations with your people. That's my biggest thing.
Awesome. Last question here. This is a little bit of story time. Have you ever seen someone's claim get rejected? And it could have been at the fault of their own, right? Because we talked about preventative measures. We talked about not taking the cheapest policy. Have you experienced or seen any horror stories that could have been avoided? And this is just to nail down all the points that we chatted about.
Yeah. You know what? I won't get into a particular, but let's just say, kind of throw a scenario out there of an example, right? So I think an example of what could happen would be if the water coverage was too expensive, right? Or the ab water coverage. Let's do it this way. If a client has water coverage, and water coverage in Canada is sewer backup and it's flooding, okay? And sometimes some companies will not have sewer backup or they won't have flooding. So there'll be one or the other, right? So let's say if there's a claim and it came through the foundation as opposed to coming overland through a body of water piling up because of rain, or coming through the sewer back, and it comes up through the crack in the basement, okay? This happens a lot. Where I have foundation issues, you might not even know you do, right? Might be behind the walls. But if that comes through and it's happened through a period of time, and it's small leak, and all of a sudden there's a big leak, right? And all of a sudden your insurance company says, listen, this has happened over time. There's a chance of that being rejected because it's been a foundation issue, a property management issue. Right. Maybe you didn't feel aware of it. Those are scenarios where it's a little tough for sure, and I guess I see it from both ends. But those are circumstances where a foundation could be cracked and it's happened over a long period of time, and all of a sudden you notice it, and the insurance company says, no, we can't cover that. So those are one of the, hard ones where, a client didn't even know, right? It could be behind a wall.
Yeah, I'm on the insurance company side on that one.
Yeah.
I mean,
It's a tough one though, man. My heart goes out to people, right? Like if something like that were to happen, but it's kind of tough because if insurance companies are paying out for stuff like that, or like let's say an older roof, that's another one, right? A guy has a 22-year-old roof, and then a storm comes through, and then it lifts it up, and all of a sudden they get a free roof, but it's a 22-year-old roof, right? And it's not fair that everybody else pays for that roof when it should have been replaced 15 years ago.
right.
Right.
Yeah.
So there's a lot of different circumstances. So it's we try to do our best though to make sure we give the best advice. But yeah, management of your property and making sure you're maintaining it is definitely important.
Awesome. And really appreciate you jumping on, Sammy. For those who want to contact you, your email is down there. The .ca, like the A is sort of falling off, but your email's there. There's going to be a re-recording, so you guys can catch it on the Facebook group. It should automatically post on YouTube as well. And then I have your Instagram there as well. Is that usually the best way for people to reach out to you?
Yeah, absolutely. You can reach me there. You can reach me on my Instagram. Inbox me. I'll give you my cell phone, and then we'll definitely chat. Looking forward to it, guys. It's just super important that you're with someone that you have trust with, and they're giving you best possible advice in this journey of investing in insurance. I definitely love my job. I have passion for it. I have a fantastic team, and it's something about this career. I don't know how I fell into it, but I love it. I really truly do, and I do my best to help my clients. And if you do have any questions, just let me know. We've been dealing a lot with apartment buildings, builder's risk. We could probably do a whole episode on builder's risk and investing and vacant land. There's so much stuff to talk about.
Yeah.
Give me a shout. We'll look forward to connecting.
Awesome. Sammy, really appreciate you jumping on, man. And guys, hope you guys enjoyed. Thanks so much for tuning in. And again, we're going to be hosting this monthly. So if you have any ideas on what topic you want to touch on next, feel free to just message on the Rise group. Yeah, appreciate you all tuning in. Have a good night, everyone.
Have a good night, everyone.